Let's cut right to it. I think that the Roth IRA ladder is the best strategy for achieving financial independence, especially at an early age. And that's because you can avoid taxes early on while you're working and making a higher income, and you can avoid taxes once you become financially independent and you actually start withdrawing from your investments. Now this works no matter whether you're single, you're a head of household, or you're married filing jointly. The Roth IRA ladder works especially well if you are actually earning a higher than median income, or even if you are earning around that median income. And that's because maybe your goal is to minimize your taxes now and minimize your taxes later. That's what's so great about the Roth IRA ladder. However, it's not the only strategy, and it might not even be the best strategy for you. If you earn a lower than median income, or if you already have a very low tax bill, then you don't even need to really be doing the Roth IRA ladder at this time, because obviously, as we all know, your income can change, your tax status can change, the amount of tax deductions and the amount of tax credits that you qualify for, that can change year to year. So you can use the Roth IRA ladder some years, or you can not use the Roth IRA ladder some years. Sometimes it's actually better to contribute directly to a Roth IRA rather than trying to do the whole Roth IRA ladder. And just really quick, if you don't know what the Roth IRA ladder is, you contribute to traditional accounts, you get a tax deduction while you're working, and then once you become financially independent, you start rolling over slowly into a Roth IRA. So you slowly roll those out every year. And then eventually, after 5 years, you're able to withdraw that money tax and penalty free, no matter what age you are. And you don't have to worry about that early penalty before 59 and a half. I have already done a full video on the Roth IRA ladder, and I really hope that you've already watched that video. But I didn't think it was enough. And so what I did was I went and I put together a full guide on how to retire early using the Roth IRA ladder. And I put together this guide in a PDF format, into an ebook format. And I really wanted to share that with you. And so what I ended up doing is I'm posting this full guide, this full book that I've written on how to retire early using the Roth IRA ladder. I'm posting it to my Patreon for my supporters for free. So if you're an on-cash flow intermediate supporter on Patreon, then you're going to receive this ebook for free. It's going to be in the pinned post right there on Patreon. So make sure that you check out that and you get a copy of the book and read that. Because if you want to retire early and avoid a ton of taxes, then the Roth IRA ladder is probably going to be right for you. In the book, I break it down into 5 very simple steps. Step 1 is to contribute to tax deferred accounts. Okay, and that's like a traditional IRA or a traditional 401k, a 403b, and any kind of account like that where you're deferring taxes. Okay, that is step 1, and you're going to do that while you're working. Step 2 is to actually reach your FIRE number. So once you achieve financial independence, you're going to go ahead and retire early. Yes, retiring early is step 2. And then step 3, a very easy one, is you're going to consolidate your accounts. So if you have a traditional IRA at this account, a traditional IRA over here, you have a workplace 401k over here, and then you have a 401k over here at this employer, you're going to go ahead and you're going to just combine all of those. You're going to roll them all over into one IRA, so one traditional IRA, to keep everything very simple. And that's going to be just consolidating your accounts. And then you're going to have one Roth IRA open as well, preferably at the same broker company, just so you can do it a lot easier and a lot more smoothly. And then step 4, you're going to actually start slowly converting that traditional IRA money into your Roth IRA. So what you're going to do is in year 1, you're going to convert the amount of annual spending that you have. So let's say that you have $40,000 of annual spending that you're going to require while you're financially independent. So in 1 year, you're going to convert $40,000 from your traditional IRA into your Roth IRA. Okay, and then a whole year is going to pass, another tax year is going to pass, and then you're going to do the same thing, $40,000 into your Roth IRA. Okay, and you're going to keep doing that pretty much in perpetuity, so pretty much forever, until all of your traditional IRA money is in your Roth IRA money, if you even are able to get it all into that, or until you reach 59 and a half. Because once you reach 59 and a half, then you can just withdraw from your traditional IRA, and you don't have to do any rollovers into your, you don't have to do any conversions into your Roth IRA. At the same time, when you do those conversions, it is going to be a taxable event, so you're going to pay taxes on the amount that you convert, and that's why you're going to slowly convert. You're not going to convert everything all at once. If you have $1 million in your traditional IRA, you're not going to convert $1 million into your Roth IRA, because then you're going to pay a ton of taxes. You're going to be in the highest federal income tax bracket, probably. So some of your income, you're going to be paying 37% to taxes, not to mention your state income taxes as well. So you definitely don't want to do it all at once. And then you have step number 5, which was the last step in these 5 easy steps that I kind of put together on there. And step 5 was to actually withdraw from your Roth IRA. So after 5 years, you have a 5-year waiting period from those conversions. So once you convert convert into the Roth IRA, you have to wait 5 years before you can withdraw the amount that you converted 5 years ago. And so that $40,000 that you withdrew in year 1 is what you can start withdrawing, in year 5. And so you're going to be able to withdraw that tax and penalty free because you already paid your taxes when you converted the amount from traditional to Roth 5 years ago. Even if it was $40,000, that should put you in a very low amount of tax bracket. So you should pay a very low amount of taxes. And of course, the lower amount of spending that you have, the lower amount of taxes you're going to pay. But then you're going to withdraw that. This is year 5 now. You're going to withdraw that money. It's going to be tax-free. It's also going to be penalty-free because there is a loophole that conversions into the Roth IRA, you are able to withdraw those. And you don't have to be 59.5, and you don't have to pay that 10% penalty. And I explain all this and so much more in that book. So if you're interested in retiring early, if you're interested in using the Roth IRA ladder strategy, or even if you're just interested in learning more and supporting me and On Cashflow, please make sure that you check out oncashflow.com/join. Just go on there, and if you become an intermediate On Cashflow supporter, it really helps support the channel. I really do appreciate that, so I can create better content for everyone. Thank you so much for watching this video. I'm Zach from oncashflow.com, and I hope to see you next time.